Welcome to the 20th episode of RealPage Economy Express. Let's dive straight into the heart of the current economic landscape, focusing on key data points and trends affecting our industry. We begin with the housing sector, where December showcased a promising 8.3% increase in pending home sales, signaling robust demand in the real estate market. This uptick contrasts with broader trends observed in residential construction, where we have seen a mixed bag of developments. Turning our attention to the economy's inflationary landscape, the PCE price index, which is Fed's preferred measure of inflation, for December reported a slight 0.2% increase from the previous month. Year over year, the PCE price index increased by 2.6%, with services inflation leading at 3.9%. Consumer sentiment has significantly influenced market dynamics. January saw a 13% surge in the index, marking the highest level since July 2021. This jump is attributed to improved inflation outlooks and personal income prospects, pointing to a cautiously optimistic economic sentiment as we navigate through 2024. Transitioning to the housing sector, the S&P CoreLogic Case-Shiller Index indicates a deceleration in the upward trend of home prices in November. The U.S. National Home Price NSA Index reported a 5.1% annual gain, a slight uptick from the previous month, yet signaling a cooling market. As national home prices continue to rise, rent growth has seen a moderation. This trend can be attributed to a significant increase in new apartment units, along with other factors, resulting in rent growth being limited to less than 0.3% over the last 6 months. On the employment front, the job market remains robust, with 9 million job openings in December, a figure that has remained relatively stable. January's non-farm payroll employment surged by 353,000 jobs, maintaining an unemployment rate of 3.7%. The strong performance in job growth likely influenced Chair Powell's recent announcement that the FOMC does not intend to lower the federal funds rate in its upcoming March meeting. Nevertheless, we believe that the rate cuts will commence in the second half of the year. In summary, as we look ahead in 2024, the economic landscape presents a blend of opportunities and challenges. With consumer confidence on the rise and a stabilizing housing market, there is cautious optimism. However, the modest inflation rates and the robust labor market signal a complex economic trajectory. Thank you for joining today's session of RealPage Economy Express. Stay tuned for more updates in 2 weeks.